its report into the ongoing mortgage arrears crisis. But are there any realistic solutions in this report? Joining me to discuss it are members of the committee, Kieran ODonnell of Gael and Michael McGrath, Fianna Fail. Also here is Karl Deeter of Property Economist and Ross Maguire of New Beginnings. Thank you, gentlemen, all for coming. Kieran, I've read the report. Yeah. It's got a number of recommendations that we should do this, we should do that. Is it not very aspirational?
No, because I think during the hearings, a lot of issues that we brought up, recommendations have already been implemented. Split mortgages, 8,000 extra split mortgages have come into being. We have a situation whereby that we have, I suppose, more consistency of treatment between the various mortgage providers. We have the issue in terms of people over 70 can now be involved in sustainable solutions so their payments can go on to a later date. We also have AIB who have rolled out independent advisors. They've put €150,000 to deal with borrowers. I suppose for us, the key thing is that this is a practical measure. What's now required is that a couple of things, that the code of practice in terms of guidelines for mortgage arrears, that will be put in a statutory footing by the government. That also the issue in terms of, I call it the paradox of positive equity, where over, say, people that are more than 90 days in arrears, over 50% of those are in positive equity. I think they're very exposed at the moment in terms of that with house prices rising. The banks could move on them because they're guaranteed to get the money back. And this is something we want the central bank to look into and issue guidelines on.
Michael McGrath, Fianna Fail, what do you think is the most important recommendation?
Well, first of all, just to say it is a cross-party and non-party committee, so we have agreed this document among the 27 members of the Finance Committee. I think as individuals, some of us would like to go further on some aspects of it and others might be a little uncomfortable with some aspects. But I think it's a good compromise document and it is aspirational only in the sense that we cannot implement it. The onus now will be on the executive, the government and the central bank to ensure that these recommendations are implemented. And in essence, I think a lot of the recommendations are built around the principle of addressing the imbalance as we see it currently between the borrower and the lender. The lender really holds all the aces in many respects at the moment, and when you look at the introduction of the targets programme, the central bank last year set targets for the banks to meet in terms of rolling out sustainable solutions. That process, in my view, was abused by the banks initially because they relied very heavily on threatening legal letters to meet their targets. They have now issued about 30,000 legal letters or cases that are actually underway at present, and they're saying to the central bank, look, we've met our targets, these are sustainable solutions. Now that was completely contrary to the spirit of the targets programme, which was about designing proper sustainable solutions to allow mortgages that are in difficulty but are recoverable to be saved and to put long-term solutions in place. So we're addressing that issue by proposing a clear definition of what a sustainable solution actually is, and I think that is critically important.
Karl Deeter, there's 100,000 people in arrears with their mortgage. Perhaps a fifth of those are really hardcore, difficult problems. Does this report give them a game changer?
I don't believe so. Really what they were looking at was pointing out the failure of what is there to help those people, because a lot of them really need social housing. They don't need a mortgage and some kind of arrears type solution. The mortgage to rent, which has been a failure so far as well, is inherently a little unfair because you have 100,000 people on a waiting list for social housing, and yet if you were able to borrow, you get to leapfrog the whole list. And the guys mentioned some of the points about split mortgages. We've 8,000 of them, yeah, but a lot of them are on trackers, and the ECB is near zero, and then the warehoused portion of this split is going in at zero quite often as well. So like, this is just a giveaway, and I don't know that putting someone on that kind of like financial morphine drip is really a long-term solution. The other thing, when you look at retirees, and that many of them have positive equity, which is quite often tied in together, I don't know that we need to give any special forbearance to people who actually have wealth in their homes. I mean, really what you've got is PAYE workers and Roscommon and Leitrim who are going to be shelling out their money into the system, which bailed out the banks so that Southside professionals can hold on to trophy houses in many times. And the lender ACEs is also a falsehood because that doesn't count in bankruptcy. So we've got to get more into the things that do work. And one thing that did come out of this that I thought was important was that it was highlighted that bankruptcy is a solution and that bankruptcy does discharge debts? And it is an answer. And I think we need to get more into the idea of people failing, allow them to fail and then move on, rather than trying to do anything we can to prevent them losing a property.
Ross Maguire of New Beginning, you've been a strong campaigner on this issue. You've been dealing at the front line of it in providing legal help to people. Where do you think the report moves this agenda forward? We're 6 years at this now.
Yeah, we're 6 years at it, and it's as big a problem now as it was 6 years ago. The report is comprehensive in that it covers all of the issues you'd expect it to cover. It is aspirational in essence. I think Michael says that there's very little a committee can do except point to the issues. And obviously there's a lot of people on the committee, and so everybody has to be heard and so forth. But I think Karl points to something that is important in the report. The report specifies what the official assignee is saying and what the Insolvency Service is saying, which is that bankruptcy is a huge, or can be a huge benefit to people in dealing with debt. And it's important that people understand that there are options available to them apart from having to deal with banks. In other words, they can take the law into their own hands now, legitimately, and be free of debt immediately. And that does change the negotiating position with them.
Why is there so little traction on the numbers going into bankruptcy?
Well, we're very new. Remember, this law came into force in December last year and was really only active from February, so it's very new. And already there have been well over 100 bankruptcies, when last year, in the entire year, there were less than 40. In Britain in 2009, there were 90,000 bankruptcies. That's where we need to go, not 90,000, but in terms of population comparisons, we should be into 10,000, and that will drive the change we need.
We'll have more discussion, an in-depth discussion about the mortgage arrears crisis, along with analysis of the Garth Brooks catastrophe after the break. Do join us. Welcome back. We're discussing the report published today by the Oireachtas Finance Committee on the mortgage arrears crisis. Michael McGrath, you were shaking your head at Karl Deeter. You think he's too gung-ho on the repossessions, is he?
Well, I think he is, and he was saying that, you know, the report in a lot of ways is a giveaway. And I would disagree fundamentally with him in that respect, because I think what we're calling for really is consistency and fairness, and that, you know, you have borrowers who are in great distress, can't meet their mortgage commitments. They are completing this standard financial statement form, sending it into the bank, and you know, we have all dealt with individual cases, and really you don't know what goes on within the bank in arriving at the solution. In some cases, you know, there is a split mortgage with a write-off of some of the mortgage, for example, no interest on the warehouse portion. In other cases, some banks say no write-off whatsoever and we'll charge you interest on the split mortgage. There is a distinct lack of consistency in the approach of the banks, and that is resulting in a lack of fairness, in my view, in the way that borrowers are being treated. So we need to know what criteria the banks are using in arriving at the conclusions that they are reaching. We simply don't know that.
Kieran, I'm being told what's happening in a lot of cases is there's a lump of arrears, they capitalise it and stick it on the end of the mortgage. But the default rate on that is also about 50%.
Yeah.
Is that a solution?
No. And the problem here is that what you want to find here, it's for us in the committee, cross-party, consistency of treatment, as Michael has said. But when you dig down and you look at the figures, the fundamental problem is that, for instance, there's 130,000 mortgages in arrears. 92,000 of those have now, over 70%, the banks have basically put proposals to. 50,000 of those are currently not in arrears. But there's 35,000 of people, of mortgage holders, over 720 days in arrears. And they're the cohort that we need to deal with. And they're the cohort that we need to bring about, we'll say, finding situations whereby if situations arise where people are no longer able to or wish to continue in their home, that the residual amount when their property is sold does not become an absolute burden on them. AIB are one institution that are looking at that. We'd expect the others to follow suit.
Yeah, you see, Karl, I can go with you on the repossessions and it'll bring supply to the market, but I don't see how anyone is incentivised if they sell their house, go into rented accommodation, and the bank knocks on the door and say, oh, by the way, you still owe us 120 grand. Where's the incentive to give back the keys then?
Well, I think you've got to look at some of the things which are the numbers, and your politicians and regulators are never going to turn around and say, guess what, we're very unique for being so off the charts and how badly we handle this. We have more mortgages in arrears than the entire Russian Federation with a population of 141 million. We have more mortgages in arrears than Spain, where the unemployment rate is 25%. We are dealing with this brutally. And when you talk about the people who have arrears and negative equity, 50% of arrears cases have equity in the home. So they're fine. They can sell and walk out and actually probably have money in their pocket. The 50 that can't sell, get that loss, and even if the bank don't offer you a deal with it via a debt settlement arrangement, which is one of the insolvency solutions, and then you push it right through. And if they won't deal with you on that, you deal with it via bankruptcy. So I don't buy into that argument that you can't do this.
But Ross Maguire, you advocated earlier bankruptcy. Under bankruptcy, Mr. and Mrs. Murphy, who forfeit their house, for the next 5 years...
No, they don't. This, very importantly, you don't necessarily forfeit your house. The assignee has said repeatedly that automatic loss of house in bankruptcy is not the case. Now, there will be cases...
Who will own the house in bankruptcy?
So,
who will own the house?
The assignee will own the house in bankruptcy, and he wants the borrowers, ultimately, to take that back. But it will depend on them being able to pay the mortgage. If they can't pay the mortgage or a restructured mortgage, that's not going to work. But what bankruptcy is doing is it's wiping out all other debts, and that can increase cash flow, and it's creating a situation where the negotiating position with the bank is much stronger. Now, I'm not saying bankruptcy is the catch-all solution to this, but one of the mistakes the committee has fallen into is trying this unending process of trying to get the banks to behave and get the central bank, which really is about prudential issues, to try and make the banks behave. And that won't work. People power will make the banks behave. Personal insolvency and bankruptcy and people asserting and knowing what they can do will force banks to behave.
For a lot of people, taking the risk of going the bankruptcy route where their family home comes into the mix, for a lot of people that it's unpalatable. And we're into a new area. And I think that what we looked at in our committee was to deal with, there are situations where people could remain in their homes, and because they're maybe with two different institutions, a lottery applies, and it may work for one and one and it may not work for the other.
But staying in the home is potentially a dangerous, be-all and end-all. For example, permanent TSB offers split mortgages, but if you get one of those, you may be required to live below, in other words, what you've got left, having paid them, you're living below ISI guidelines. That's below what the state says is breadline. But they leave you in your house. But is that really a solution? I mean,
there are many other people, Ross, who want to remain in their family.
And the other thing is, a lot of these solutions, the banks, even the great AIB splits, where they will review you at a moment's notice. In other words, any change in your circumstance, they're after that. Again, they're in complete control, and people are being turned into debt
Michael,
slaves.
I want to ask you, one of the recommendations to the report is this idea of mortgage to rent. So you can't pay your mortgage, your bank becomes your landlord. You said it's not fit for purpose.
Well, it's not working because we have only had 40 completed mortgage to rent transactions so far. And when you look at that in the context of over 130,000 family home mortgages in arrears, it's a bureaucratic nightmare. You have too many bodies involved, and it seems to have become completely bogged down in red tape. And it needs to be completely redesigned to make it work, because the reality is, and I accept Karl's point in this respect, that with the best will in the world, some mortgages are unsustainable, and some people actually would be much better off to start afresh and use, just one moment if I can, and use the statutory mechanisms that are there through the insolvency service or bankruptcy and start again. They would be better off, but you need to have a safety net in place, because a lot of people, they want to stay in the home, they're prepared to relinquish ownership, and if you can get a properly functioning mortgage to rent scheme, that's a good solution for a lot of people.
I just have to be a little flabbergasted. There's 100,000 people on a housing list, all right? And none of us are arguing about that.
These are applicants for social housing.
But if you were good enough to, at some point in the past, to have borrowed loads of money, you just go right to the top of the queue for all them. They can all go to the back, and you, because you happen to be the lucky middle-class person who was able to borrow up a load of money, you then get the social house before they do. What we need is social housing. You know, that's really what the core is. And that is a failure on behalf of successive governments. And of course, the guys aren't going to admit to that, but that's really where it lies. And it's being dressed up. These mortgage arrears, there's 35,000 2 years behind.
Limerick City Council is going to give houses to people who are in that situation.
The way the process works, I think the point Karl is making is that effectively people can go the mortgage to rent route, whereas someone who's looking for a social has to go on a housing list. There is an element to that. I think one of the key, I would say, flaws with the mortgage to rent scheme at the moment is the banks have a veto. Banks have to put you forward. They're the sole arbitrator in who goes forward. I think in terms of the building programme, that's something I think that we have to look at. Not enough houses, social housing was built last year. I think that's something that we have to remedy. It's now, funding is being put into it. Further funds were announced today by Minister John O'Sullivan. But I think with this specific issue, what we want really here is first of all, to get consistency amongst the institutions, and secondly, certainly the area of bankruptcy and the whole issue of the insolvency, we'll say, regime. There is an element of cost for ordinary people as well.
Is there not I mean, any of you can take this. Is there not a fundamental flaw that at the end of the day, the regulator of the banks, the protector of the mortgagee, is the central bank? And the central bank are the guys who are responsible for the stress tests, the prudential provision of the banks. And so they're at the heart of it. They're conflicted in Dame Street. And they could be the provider of capital of last resort for the bank, Michael. Is there not an issue whereby the bank, the central bank, will always prioritise their prudential role over their consumer protection role?
Well, I think that's what seems to be happening. And I think the banks, the central bank, and indeed the government are scared that eventually the banks will require more capital, especially if they do face up to the extent of the losses that they're carrying, not just in respect of family home mortgages, but buy-to-let mortgages and indeed SME debt as well. And we have seen some pretty startling figures in relation to SME debt over the last number of weeks. And I think until the stress tests are completed later this year, I think the banks are going to maintain a very tight approach. Nobody is advocating that there would be a giveaway in terms of writing off mortgage debt or anything like that. What we need to have is a system that is transparent, that is fair and that is consistent, and that every borrower who is in this mortgage distress knows how the system works. And at the moment people simply do not know how the system works. Do they go to New Beginning? Do they go to another group?
The elephant in the room is that there are some mortgages for which the only solution is to write off some of the mortgage.
Absolutely. I mean, if the banks were to insist on full payment now, there'd be chaos. So you're quite right. For a portion, and perhaps a large portion, the only way to do it is through writing off debt. And that is not something that is unthinkable. That in modern capitalist systems where credit is given as it was given in this economy during the Tiger years, write-off is part of the process, and often people come out of those processes stronger and better than before. Examinership, for example, which has been available to companies since the 1990s, is a process where a company can't pay its debts, goes through a restructuring, has debt written off, and then comes out stronger and better before. SIAC is a recent example of a company that would have gone to the ground and people would have been let go. Now it's back in profit, and the same has to happen for individuals.
Karl.
I just get back to your point on the central bank. I mean, the historians are going to take a while to get onto this, but the most toxic bank we had wasn't Anglo. The most toxic bank was the central bank. The regulatory failure was immense. The policies they've enacted since the onset of the crisis have taken from the playbook of some of the worst decisions you could make. The moratorium on repossessions was failed policy in Eastern Europe, and then we reenacted it here. They're losing talent everywhere that they turn. Peter Oakes, Fiona Muldoon, Matthew Elderfield. If the central bank was an actual listed company and all the executives were leaving at the rate they're leaving there now, it would actually impact the share price negatively.
Very quick. The central bank is there to regulate the banks. Before we started our hearings, the banks were setting no targets for the central bank was setting no targets for the individual banks to deal with mortgages. That has now happened. In March 2013, they set targets for resolutions. They must provide resolutions to up to 70% of mortgage holders in more than 90 days in arrears. They've done it by the end of March. That is up to 75% by the end of June. Ultimately, when it comes down, a lot of people want to remain in their homes. So this is about information as well. The people understand how the system happens, and it's transparent and there's consistency.
The final word to you, Michael.
The problem is, though, Kieran, that the targets programme, while well intended, has been hijacked in that it has resulted in over 30,000 cases.
And Michael, no one has pointed out more than I have.
Yeah, and that's what we need to change.
That's
I'd like to thank,
report.
gentlemen, I'd like to thank all our guests for that. We're 6 years at it, and I think we could be a few more at it. Kieran, Michael, Karl and Ross, thank you all very much indeed. Well, of course, there's just one issue that we have to turn to now in terms of a preview of tomorrow's papers. It's Garth Brooks. It is wall